All right, everyone, here we are with ticker symbol PLTR. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back, and let's jump into this chart. So PLTR has hit highs up here of about $33, then it dipped and came back up to 30, and then it hit another high here of about 29, and from that point forward, this has been struggling to hold itself up. We've been in a bearish trajectory for some time, and PLTR just keeps on hitting newer lows. So I zoomed out before I zoom in, and one of the most important numbers here, if it continues to break through support levels, is 2143. I'd write that down in the near term for the coming days and weeks if the volatility persists in the downward movement. I want every single investor to be aware of that. 2143. So we're sitting at 2353. The 50-day moving average is 2465. If we stay up below that, this is dominated by the bears, and this is just going to continue to pull further away from that as it continues to break through support levels. So our first support level to worry about right now is 2351. It's 2 cents away. It got touched twice and it was trying to hold itself up, and the last couple hours of the day kind of just left it there stagnant at 2353. So we need to watch this carefully tomorrow, how quickly this breaks through support. Now, if it breaks through support, you want to watch carefully how it's reacting and if the bulls are trying to reappear. Because keep in mind, we're already in bearish territory, and breaking through support just pulls it further away from the 50-day moving average. Now, if this goes ahead and continues to hit newer lows, and we're watching it hit newer lows, keep in mind 2143 in the near term for the coming days and week, according to volatility, if it continues to pull down. Because if that gets broken through, based off the chart, when we zoom out, I think that's one of the lowest points after this bullish run. And then we have the next point at 18. Then we go down to almost 15, and we'll have to watch those numbers as they go towards that. So right now, 2143, right? Let me just double check I'm correct on that. I haven't seen it again since I stated it. But yeah, 2143 is one of the most important points. So before getting there, 2351 is our first support. We know our 50-day moving average is 2465, and as long as we're below it, we're in bearish territory. The moment we're above it, we're in bullish territory. So what do the bulls really need to do? They don't just need to cross the 50-day moving average, because yes, that gets them back into bullish territory. They need to cross the first resistance level, which is the highest point before this continued to fall. And this drastic change, it's almost $2 of a change that this stock fell literally in one day. And that resistance level is very important beyond the 50-day moving average, and that's 2517. That needs to be turned into a support so the bulls can start to pull this one back up further away from the 50-day moving average and get themselves deeper into bullish territory to hit new highs and new resistance levels. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watch this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.